When we are investing in cryptocurrency, we need to understand that it happens in a macroeconomic environment, meaning everything is connected. War in Ukraine, inflation rate, interest rate hikes, food shortages, oil or whatever. It's all layoffs. It's all interconnected here. And I'm just a lizard brain cowboy. I'm not your financial advisor, but I'm just trying to piece together everything. I'm trying to understand like how this all works together because I want to make the best decisions for my life, for my family, with my money, especially coming into June, or rather July, after June, because now we're gonna know, hey, are we in a recession? Are we not gonna? What's the market's gonna do? And how is the Fed gonna respond to all this? If you're new to this channel, my name is Aaron, okay? I'm just trying to piece this all together. If you like this kind of content, hit subscribe. But I wanna take you to this video here of Jerome Powell testifying before Congress, talking about the strength of consumer spending, okay? Talking about the strength of consumer spending and where they see interest rate hikes are going to go, or rather inflation is going to go.
Probably worry about inflation. Talk for a moment, if you would, about the strengths of the American economy now and whether or not you see positive signs of prices stabilizing.
Well, consumers are overall, not every consumer, but overall the consumer sector is in very strong shape financially. There's, as you know, a very substantial accumulated quantity of savings on balance sheets, less so at the very bottom of the income spectrum, but right across the rest of the spectrum. And so that's there to support spending even in the face of higher inflation. And you're seeing consumer spending hold up pretty well. Sorry, the rest of your question.
Well, are there positive signs of prices stabilizing?
So in terms of prices stabilizing, you know, what we're looking for is, you know, compelling evidence that inflation is coming down, and we don't have that. So nothing I could point to says that we.
He's looking for compelling evidence that inflation is going to slow down or stop or reverse, and he doesn't got it. And fully admitted. Okay, so as a result, he's basically saying the Fed will fight this inflation. And how is the only way? Interest rate hikes, 75 basis point hikes, 75 basis point hikes. They're going to do it. They're going to do another one in July. They're going to do another one in September. They'll probably do two in quarter four, Q4. And so that's what basically he's saying. He's saying like, look, and I don't know what kind of consumers he's talking to. Okay, that we've you know, these consumers got a lot of money in the bank, and that we have no worries about inflation. that to me is crazy. So I don't know what kind of data he's pulling that from, or you know, his circles. He's probably got a lot of consumers with a lot of money, but not this cowboy. This cowboy is old and janky on a broken horse with a one shoe horse on his horse and a broken saddlebag full of sand. You know what I'm saying? Like this is not anywhere. But in this part of this video, he talks about a forthcoming recession, or rather his predictions of how if a recession is going to come and hit us.
But again, still far too high. So we're looking for that. We're not really seeing it yet. You know, there are lots of stories out there how this should happen, and some people think it's very clear that it will. And you know, until we actually do see it happen, we need to keep moving.
And I want to be clear from your comments publicly, your comments to this committee today. You say the economy is not at the point of a recession, correct?
I don't see the likelihood of a recession as particularly elevated right now. You should know that no one is very good at forecasting recessions.
Oh, get out of here. Okay, so he did three things there. He said one. Okay, he said one. He said, we're looking for signs of a recession, and we're looking for this recession to happen, but until we see it, we're going to keep on moving. Like, that's word for word. That's like, until we see a recession, we're not going to believe it. I'm like, what kind of... And two, did you see the way he cleared his throat? He was like, yeah, you know, we don't think this thing's going to we don't think this is going to come in. That doesn't make any sense, Jerome Powell, especially when the Fed in Atlanta, your own boys, okay, is saying something different. Fed GDP tracker shows the economy could be on the brink of a recession. The Atlanta Federal Reserve GDP Now tracker is now pointing to an annualized gain of just 0.09 for the second quarter, down from an estimated 1.3 increase less than a week ago, with first quarter growth down 1.5%. A second consecutive quarter of negative growth meets a rule of thumb definition for recession. He's saying here that because it would, if the second quarter, end of June, makes it is a negative growth, it means we are in a recession. This is from your boys. Okay, this is from your boys, the Fed. Okay, so now the Fed is talking out of both sides of their mouth right now. They're saying, no, we don't see no reflection. And they say, oh yeah, Atlanta, we've seen some reflection, baby. And so reflection sounds really, look, and so that's what we're looking at. One thing that I wanted to show you is that in a recession, this seems to be very scary, and it's for the layoffs, okay? You'll see here, and let me just try, this is a layoff chart by layoffs.fi, F-Y-I. So you see here in March 2020, this is when the pandemic happened, okay? And we see a massive spike of layoffs and a drop down. This is when all the stimmy checks were hitting. And when I say stimmy checks, I don't mean the American public. That was nothing, okay? $1,200 is nothing to keep any household alive. It is the stimmy checks for like the businesses and PPP loans and all this kind of stuff. And so you see a drop in layoffs, and the reason why is during this period right here of stimulation, quantitative easing by the government's pumping money into the economy. This is a mode of expansion for businesses. When businesses get more money, this is how they raise money. They take more loans on. And why would they take loans on during this time? Because it's cheaper. They have to pay zero interest rate when they take on loans, and then VC funds are now investing in these guys because they're taking on loans. It's a mode of expansion. And so what ends up happening is that these businesses start to expand at a deficit, at a cost to themselves. Usually you're expanding, or you're growing and you're trying to make, sell more and make a net profit, but not in this particular case. A lot of these tech companies wanted to just expand at a cost to themselves. Why? To gather market share, to gather adoption, to gather more users onto their apps or whatever. Now, that happens in a time of quantitative easing, okay? That happens when money is pumped into the system. But when money stops, okay, it stopped right here, okay? It stopped right here. That's when layoffs started to happen. Like, February 2022, we got to start laying off our people. Why? Because there's no more money coming in, okay? New employees laid off right here, Q1 of 2020, right? And then this is when stimulus was really taking effect, and now layoffs are happening again because stimulus has stopped. We see it over here. These are just different charts of the same story here. We see layoffs spike, layoffs plateau, and then layoffs start to spike again Q1 of 2020. Why? Because this is the effect of quantitative easing. If you don't think that the Federal Reserve has any kind of sway over the economy, look at the charts, bro. Okay, when they pump money into the economy, everything goes up. When they don't, this is layoffs. When they don't pump money into the economy, layoffs go up. When they do pump money, this is money pumping time right here. This little section, that's money pumping time, baby. That's when everything's good. No layoffs, everyone's expanding. So we see, but here's an interesting one. This is let me make this bigger. This shows air layoffs for different startups and stuff like that. And so if we just go sort by date, these are all the layoffs that happened recently. See, 621. And so we look at number 12, Bybit. We look at number 34, which is Coinbase. Let me see, Coinbase right here. 1,100 people, 18% of their base of their working workers. 36 here, Redfin. That's that's crazy. Real estate. That's crazy. And we see this in different sectors too, not just tech. Okay, so we see it in food, in finance, in real estate. Here's travel layoffs. There's all others. Not sure what that's counting. Transportation is a big one. So we're seeing tons of layoffs in different sectors all over the place. I don't understand what the Jerome Powell is saying here. But in this particular one, Josh Brown, he's from Up Capital. He manages Up Capital, a venture capitalist. And this is what he says about the Fed and what they're saying, what basically Jerome Powell is saying.
Airfares falling for the first time, customers talking about rising prices, housing prices are down, mortgage rates are soaring. What do you say?
If you're listening to the Fed, the question is which Fed, because what Powell is saying does not jibe with what the Atlanta Fed's GDP Now forecast says. That forecast says we are in recession, no growth in the second quarter. So we'll, by the time we get like actual clean data post all the revisions, it takes a while. But I've made this point on the show. I've been making it for a while. It doesn't matter if we're in a recession or a soft landing, because in the minds of the consumer, and the consumer is 70% of the economy, it already feels like a recession. It already feels like a recession. So it's almost like semantics at this point. We are in a slowdown. It feels horrible. The people who can least afford to be in an environment like this are obviously the people at the lower end of the income scale. And
so here's what he's saying. Josh Brown, he's a smart guy. He's saying, look, the consumers' sentiment, the official verbiage doesn't have to come out saying we're in a recession yet. The Atlanta Fed is already saying that. It doesn't have to come out. Why? Because consumer sentiment is already there. We already feel like we're in the recession. It's already feeling horrible. These are two contradicting views from the federal Jerome Powell and Josh Brown. And it's like, well, like, how do you make sense of this? And to me, it's just, you look at the data, okay? You got one side of the mouth of the Federal Reserve talking something, and then the other side, and then you just look at the data. And the data sources, look at your own life, look at the people around you. What is it that's happening? Do you feel like the economy is constricting on you? Now, I want to finish up with this video here, and it's by Ron Barron, and he's 52 years venture capital or capitalist, and venture capitalist backing up. He's an investor, and he says this about going into July of 2022.
We heard from billionaire investor Ron Barron early this morning, and he has a message. He wrote an email to Joe and I in which he writes, "This is a huge once-in-a-generation buying opportunity, huge, monstrous opportunity following June 2022, June 2020 as well crash." He told us about how he was talking to his sons who've been in the investment business for about 20 years now, and he suggests that they now have the same opportunity he had when he founded Barron Capital back on March 16th of 19.
See, so now he's saying basically, look, we have some of the best opportunities coming up here. There's going to be a crash in June, and then we're going to be looking at buying some of the best assets in the world at a cheap and just fraction of what it's really worth and what the value is. I don't know if it's stocks for you. I don't know if it's land for you. It could be it could be gold or whatever. I'm willing to bet it's crypto because you're on this channel. For me, that's what it is. I'm not smart enough to be dabbling away in real estate or stocks. I feel like that's an old man's game. I'm in it with crypto, baby. I'm in it for the long haul. I think it's something that is revolutionizing. Blockchain industry is revolutionizing the world. That Bitcoin is the best store of value on the face of the planet. I think it's everything that gold wants to be. This right here going into July and the rest of the year, it's some of the best buying opportunity of our lifetime. When is another time, like another industry, revolutionizing industry, gonna just enter into your space, into your lifetime? I think this is it. So what do? We buy. This is not financial advice, okay? But that's what I'm doing, right? If everything's crashing, everything's down and bloody on the ground, breadlines around the street, fear just gripping everything like Vecna and Hawkins, we buy, baby. That's what I'm doing. I'm not your advisor, but golly, I'm gonna do everything I can to make more money during this time. Side jobs, side hustles, whatever it is. This is the best opportunity of a lifetime. Monstrous opportunity. Best of luck. I'll see you in the next video, cowboy.